Okay, guys, in the last 35 years, there has been 56 rate reductions and 44 rate increases. That's over 100 changes in rate reductions and increases I've witnessed in my career of real estate. This morning, we're going to talk about the influence that this has and the influence that this increase that we've just had yesterday is going to have on our domestic market. Stay tuned.
I'm the ringleader, so listen up.
Josh Wapshot, real estate agent. Mark Novak, real estate agent. Agents for almost 40 years together, you and I. And we do call you the economist at Novak. How did you feel yesterday when those rates went up?
Yeah, well, I'd hate to say that I wasn't surprised. Being the economist, my background stock trading. It's quite funny. You can sometimes get some telltale signs from the market itself before it happens. So actually, traders prior to yesterday's announcement were putting in a 70% chance that rates were going to rise to some degree. So there was some belief. The only thing that had me not thinking that it might hold was just a rising Australian dollar, because obviously that also plays into the big scheme of things, can be a bit confusing, but a rising Australian dollar, generally they don't want to increase interest rates at that level, because then Australia on an international level becomes less competitive. But yeah, very interesting. What's your take on it, Mark?
Look, I'm surprised how spicy everyone is about it. It feels like when we've had often when we get increases or people are a little bit more aloof. But I'm feeling like people that I've been talking to the last 20 hours are very spicy about it. They're very like, screw screw you, government, and what the hell, and they feel blindsided again. On the back of when we had the what I think it was 13 rate rises after COVID. There was there were these promises from government that it was going to be a couple of years before rates went up, and people felt like they had a little bit of reprieve. They did not, and they had a slap in the face when the rates went up. And I feel like people are feeling that slap in the face because on the back half of last year, we thought we are going to have another couple of rate reductions. In the back half of last year, we thought that in the first half of the year that the back half was going to have further reductions, and it's gone the other way. So another slap in the face.
Yeah, and all it looks like it's inflation driven. So we're definitely above target. I think underlying inflation was about 3.2, and the target for the RBA is that 2 to 3% band. But we had a really interesting topic while we're talking about this now, where we're talking about it's not necessarily a negative when we see these rate increases introduced. It's generally to slow down the machine, and the machine being the economy. And that really ties in well because the economy went really well towards the end of 2025. I think we finished GDP, which, guys, is called a gross domestic product, and that's how basically countries measure their output, import, exports, and overall income. And we actually finished at 2.3% for the end of 2025, and the expectation was 2. So it's quite a good result for the end of the year, and probably follows into the pattern of us now having that 0.25% rise just to cool things down and make sure that inflation is kept in check.
And look, I think when you're looking at real numbers, which we started the conversation off today, you mentioned in terms of real numbers that on $1 million of mortgage, it's going to affect people by $150 a month.
Correct.
And I
Yeah.
think you mentioned on real numbers, um, like with
18.
yourself,
Yeah.
you got to be
Sorry, you go.
making 18 grand more a year just to get a loan. If you're getting a loan for $1 million, you got to be on another 18 grand on top of your group certificate. So lending and buying is going to become harder incrementally again. So the government's come along and said, we're going to give you this wonderful incentive, 5% deposit up to $1.5 million. 5% deposit you can pay, and you don't have to pay a lender's mortgage insurance. But on the other hand, they do this, and you got to be putting 18 grand on your group certificate. So they're doing something easy on one end, and they're doing something impossible. How's a first home buyer going to whack their wage up 18 grand from yesterday to today just to get the same loan?
I know. Yeah. It can impact some segments of the market, but you also see Sydney as a whole quite resilient to a lot of these changes. When you compare it to the rest of Australia, even at the early first 2 quarters of last year in that high interest environment, we actually saw some growth within the market. So it is quite resilient, Sydney. But yes, you're definitely right in terms of buyer behaviour, seller behaviour. These changes do have effects. Some of them don't last, some of them do. Because what generally seems to happen is people get this information, they process it, and generally they wait for the first, someone else to make the first move, and all of a sudden it's, it's straight back into that competitive environment because there's just so much demand for property in Sydney, especially.
Look, and I think it's great for real estate agents to always be talking up and this, the silver lining, and that's great. But there are people out there that are having a genuine hard time um, at the level of rates, because they're still almost double or triple of where they were at a point. But then people quickly remind us that that this is the norm for rates, whether it's up or down 0.25%. We should be sitting around that sort of six or 6.5% as a country. If you look at decade on decade. So if it's skirming up or down around this level, it's about this level is where it should be. And I really want to resonate what you just said, Josh, that when it's I think we're one of the only advanced economies in the world that has increased interest rates. We're the first guys on the trigger to do it. I don't know if we'll be the last, but I think it's a worldwide. If you look at any other interest rate metrics, where we've gone up, which is just weird. But what resonating what you just said, every single time, and I can say this over 30 years of being an agent, every time I've seen rates go up, I've seen it in a great real estate property market. The rates go down when it's a shit property real estate market, and the rates go up when it's a great property market. So I think in one way, if you're a property owner in Sydney, you can celebrate or pat yourself on the back by saying, my property value is safe and I'm in a good property market. And at the same time, you're getting whacked on the bum by having to pay more interest rates for that home or that asset month by month until further notice.
Yeah, exactly right. And like you said, I think there's plenty of evidence to support that, especially in the Sydney market, like I said. And it'll be interesting. Do you have any thoughts on as to if they will continue to rise again? Because you look back at history, generally when they do raise, it's not just a one-off. So that's one thing that I've looked through in past history, that generally if we see a 0.25, we generally get another one along with it. Whether it's them. Yeah, they group them. You've got to really, moving averages, it becomes a bit technical, but with charting and things like that, and when I say charting, that's tracking price, tracking performance. generally you never see anything go up in a straight line, and you never see anything go down in a straight line. So generally you have that stair-like analogy where
like
they
that.
step you and step you on the way back down when they're trying to control certain factors within the economy. So yeah, it could be a chance that they either hold next meeting and then rise once again and try and really get a hold of that inflation. But just wanted to see what your thoughts were on that.
I think it's a good posture to take. I think, prepare for increases. Prepare for increases, troops. For the balance of the year. But I will say this, and this is a great hack. If you do feel like you are a little bit in a corner and like, oh my God, I was just about to do this with property, or I was just about to do that, now I'm hamstrung, and you are hamstrung, you can create a 2.0, another version of yourself on your shoulder. You can have a property fairy, you can have a property angel on your shoulder, you can have a Mark Novak 2.0 or a Joshua Wapshop 2.0. Think about your super, because an average Australian has 180,000 in their super, and you can borrow, if you've got that, about 300, 400,000 on top of that 180. So you can buy something for 600,000. Why am I saying this? It doesn't affect your lending. It's almost like a different human or a different company. So people don't realize that you can, even though you're hamstrung with these rate rises and that is quarantined off to you and your family and your name, you can actually make an independent, separate investment with your super into property that is going to mature when you get to 60, 65. So don't feel like you're up against a wall, or don't wait another 5 years to get into that investment property to give you financial freedom. Talk to some professionals and get some stuff done within your super whilst these rate rises are happening. Separate it and do something on the side.
Yeah, awesome. Yeah, and another thing I want to say is probably it also can be a silver lining there for buyers, I think. Like I said, generally you hear this news, the conviction in the market tends to drop a little until the crowd mentality comes back in. So I actually think it's a good opportunity for buyers out there. Less competition. If you've got the strength, exactly right. Do your research, make the right decision, but go in hard when everyone else is thinking, and buying well is how you make money.
I love that. Yeah. When everyone thinks you zag.
Exactly. So yeah, always something positive to look at, and especially when it comes to property. Hey, Mark.
Absolutely. Josh Wapshop, The Economist, thank you very, very much for your chat today. And let's see how this plays out, guys and girls. Good luck with these rate rises. And we are here for any advice. Pick up the phone, call us. Don't feel silly. For free, we're here for you. Call us today. See you, bud.
See you guys. Bye.